Now, talk us through market activity today. We did see turnover falling back significantly to what we saw happening in yesterday's trading session.
Yes, apparently it looks like the momentum is starting to lose steam. And we saw that today with about 21 shares on the decline vis-a-vis 14 on the advance, as opposed to the trend that we've seen in the last 1 week where share prices were generally rallying. So I think it's probably an indication that taking their profit. We think it's a temporary effect, and we think the market is likely to rebound pretty soon.
We've had a number of companies report results. Now, recently we had KCB reporting results, posted a 34% jump in pre-tax profit, forecasting a good 2012. What are your thoughts on the bank and prospects going forward?
Well, I think the banking sector is still proving to be quite resilient. And I think the key factor is in as much as deposit rates went up, raising the cost of funds, lending rates are still relatively high, resulting in more or less the same spreads that we were seeing last year. And I think in as much as banks have not grown their loan books significantly, especially in the last quarter of last year and first quarter of this year, I think existing loans generally should enable them to continue to post very healthy net interest margins. And the extension also, when you factor in income from non-funded sources, they should continue to maintain their earnings. So I think banks are still going to continue performing well. But the only danger, I think, moving forward and looking at the current scenario is that if lending rates do not drop, perhaps to levels where they were previously, the risk that is inherent is that there might just be a rise in or a jump in non-performing loans as borrowers start feeling the pinch, especially in line with a weak economy. And I think if we look at the NIC results today, there's a 7-fold increase in loan loss provisions, and I think that generally is not a good trend moving forward. So the only concern, I think, is what's going to happen to loan loss provisions moving forward, and by extension, how much non-performing loans are going to rise.
And looking at KCB, it has rallied about 32.7% thus far this year. You are seeing further upside to banking stocks. At what level could we perhaps see KCB going forward?
KCB is still going to continue performing well. I think one of the things that they managed to do is that they managed to diversify in the region. They are practically in all the countries in East Africa. And I think that in itself is probably an insurance as far as political risks are concerned, and of course diversifying their loan portfolio as well. So I think when you look at KCB's performance, it's really not a surprise. Of course, their major strength is in the Kenyan market, where they have, that's where the bulk of their earnings come from. And I think looking at their presence and the efforts they've been making in terms of expansion, in terms of restructuring and so on, especially in the side of increasing efficiency things, KCB is still going to continue performing well.
Now, moving away from the banking sector, we had Crown Burger also out with results. That company kept its dividend flat and also closing the day on flat, sitting at 25 shillings and 25 cents there. What were your expectations of the results? And looking at that dividend, was it expected?
Well, I think personally, I was quite surprised. I was quite impressed by their performance. I mean, looking at the difficult trading environment last year, especially as far as the production costs are concerned, because of the high inflation and, of course, as a result of the weakening of the shilling against hard currency. So the fact that they were able to post such results and actually, maintain the dividend policy at where it was, I think is quite impressive relative to the environment that they're operating. And I think there are also indicators that the building and construction industry was more or less slowing down, especially towards the end of the year. And this is mainly because of the reduced activity by developers due to very, very high interest rates. So I think the fact that they're able to post those results is an indication that they have a very, very strong presence in the market. And I think that probably is informed by the quality of their products and the pricing of the products as well. And the fact that they've actually been able to contain their costs is actually quite encouraging. And I think if they continue on the same footing, then we should not perhaps expect a very, very marked change in terms of their earnings performance. But as far as dividend policy is concerned, I don't expect them to significantly increase their dividend moving forward because they made a statement about conserving cash, especially in line with the tight liquidity in the market and the very, very high cost of borrowing prevailing currently.